Hims and Hers is releasing their earnings on Monday. So for all Hims investors, I'm going to be telling you what you can expect, what you should look for, and then also how you can expect the stock price to react after they release their earnings. I'm also going to go over a general stock market update. We have a lot of stocks hitting all-time highs. We have AMD and Intel surging. So I'm going to go over exactly what's going on and what you can expect also next week. Then lastly, I'm going to go over my $100,000 challenge, week 49. Let's get into it. All right, everybody, this is my weekly stock update. If you can, please give a like and subscribe. I really appreciate it. Let's get into it. So Hims earnings expectations, the stocks are continuing to run, and my $100,000 challenge, week 49. So first, let's get into Hims earnings expectations. They are releasing on Monday, so let's kind of go over what we can expect. Management guidance versus management expectations. So the projected Q1 revenue is between 600 and 625 million. This is actually lower than most analysts' estimates. The consensus EPS is approximately 2 to 4 cents, representing a significant year-over-year decline from the 20 cents reported in Q1 2025. So we can expect a lot of decrease, right? Last year, the revenue is going to be lower last year, but the growth rate's not going to be nearly as high. So you can expect lower than usual numbers. Again, 5/11, May 11th, they're releasing. This is expectations, 3 cents, and the revenue, 616 million. All 8 analysts have done or at least 8 analysts who have done EPS revisions have brought it down. As you can see, this is kind of looking like the bottom though. Analysts are expecting this to be their lowest quarter, basically, when EPS. They've been doing a lot of investments. They had to go through some litigation and stuff. It's all over now. But there's been a lot of stuff going on to where analysts do think that this could be the bottom. Now, I mean, I tell my kids buy low, sell high, and it depends if you really should be selling at any point. But the point is to be buying low. If this is where they're going to be hitting the rock bottom in EPS and revenue, then I'm okay with that in terms of growth. So from here, after this quarter, it's looking like forward thinking EPS is going to continue to grow. So that's obviously good. If we look at the past earnings that they have put out there, the last time they put out the Q1, the revenue grew 110%. The year before that, the revenue grew 45%. The year before that, it grew 88%. This year, we're looking at like a 7 to 10% revenue growth. When have you ever seen anything like the closest to that is 28? As you can see, that was the last quarter, 28%. These last 2 quarters are the lowest they've had, basically 28 and 49. They had a 47 right here growth and a 45, but really they grow at a high double-digit rate. If they bring in a very low, like a single digit, that's not going to look good. If you understand the business, you kind of understand why, but at the same time, that doesn't look good. So number 2, weight loss segment and regulatory impact. People do want to hear what's going on with the Novo deal. Investors are also watching for an impact of a 65 million revenue headwind. So they got hit by this. Basically, they have to go through all this different shipping cadences because now their personalized compounded drugs are no longer, you can't do that, right? You have to ship it the way that Wegovy does, right? Novo. So that's different now. And then investors are going to be also looking for the updates on the Novo Nordisk, not the patent lawsuit really, because that's over with, and any FDA restrictions on peptides, which again, we're going to kind of go over those too. It's nothing really much. This is again going over the shipping, over the GLP-1 medication. So now they're going to the branded lower margin option. So that's why they're having that shipping cost. And then Novo Nordisk has dropped the patent infringement lawsuit against Hims and Hers. So that's not an issue anymore. And then also the FDA is setting up a meeting to regulate peptides they have 14 peptides that the agency removed from the list as it's not safe to compound. Well, now 7 of these peptides are going to be up for reclassification in July 23rd and 24th, and another 5 will be reviewed in February 2027. So peptides are actually becoming more relaxed, and so that's a good sign. These are the 4 that are going to be discussed on July 23rd. And then this is the 3 that are going to be discussed on July 24th. These are the really popular ones right here, BP 157 and TB 500. I've heard people talk about that when they've had surgeries and stuff like that. So I do know that those are the more popular ones. And then as of mid-April 2026, there's still a high likelihood that the reclassification of these peptides will be reversed by the FDA, essentially putting them to Category 1, which allows them to be legally compounded by people or companies like Hims. The current regulatory status in 2023, they banned 19 of the peptides, so now they're going to do a reevaluation, and then the likely outcome, again, is that most likely these will be... Again, you'll have legal access to compound it for the pharmacies. The implication of the reclassification, what's going to happen when the peptides do actually get reclassified? Pharmacies like Hims and Hers are going to be able to legally compound all the peptides. The reversal does not mean that the peptides are FDA approved. It just means that they're no longer prohibited from being compounded, which is going to make them a lot safer. It's going to let them do a lot more testing and all that stuff. The market impact, this does shift peptides away from the gray market back into a regulated, medically supervised environment, which of course is better for everybody. Now we also have operational and growth metrics. So beyond the weight loss, we're going to need to see growth on the core verticals like sexual health, dermatology, and new offerings like the labs and hormonal support. We also want to see international expansion. The revenue from international markets is expected to be a driver of 2026 from at least $200 million in revenue. A bunch of that's from the acquisition of Eucalyptus. And then we're also going to be looking at subscriber metrics. We need to see stability and, if not growth, in the monthly online revenue per average subscriber. How much are they making per subscriber every month? It was at $83 on the last quarter. If they can raise that to 87 to 90, I would say 86 to 88 in this, that'll be good, because I would hope that they can continue to raise that up. Here are all their other offerings, right? You have weight loss, sexual health, dermatology, mental health, hormone health, longevity. You have the labs test, so it tests your blood to see your heart, your weight, metabolism, liver, kidney, all this stuff. So there's all these different things that they're testing for, and this is kind of new, so we need to see some, expansion, some growth in this. Carl Schultz, don't know how to say his first name. He's basically in charge of their international expansion, right? So he was huge in Novo. He spent 3 decades there, and he knows what to do in the international markets. He worked, like I said, with Novo for 3 decades. So I feel confident with him. And then this is their last earnings. This was, again, their Q4. So, I mean, if you're looking at, compared to last quarter, I mean, year over year, 600 to 615 million is growth. Quarter over quarter, that's not. That's also not good, right, when it comes to revenue. But we'll see exactly how it works out, because now with the Novo deal, that might change things. And subscribers, we do want to see the subscribers going up. And again, monthly revenue per average subscriber, $83. That was up 28% year over year. So we do want to see that continuing to grow. The subscriber growth and revenue per subscriber, again, this is kind of how it looks more like in a chart form. As you can see, the revenue, right? Their revenue has continued to grow, but their revenue per subscriber hasn't gone up that much over the years, only recently. So I do want to see them continue to boost this up, and I think that will significantly boost the revenue. I mean, of course, right? If you're making more per month per every subscriber, you should be making more revenue. So I do want, and I expect this to jump up a lot more. And as you can see, the rest of the world, the international, is becoming a bigger chunk. It used to be only 27 million, now it's 134 million. So it's definitely, it's growing. It's growing. Profitability and margin. So the Q1 adjusted EBITDA is expected to be 35 to 55. Pressured by seasonal investments like the Super Bowl ad, which again, that's going to be every single year. So at this point, just expect it. Analysts are monitoring gross margins, which contracted to 72% basically due to shift in sales mix and new product launches. All this, if you watch Celsius at all, when Celsius had to change to go into PepsiCo, and then they got Alani Nu, and then they're having to change distribution centers and all that costs, and it's gonna improve things eventually, but it's a cost. So Hims is having to go through this cost of Novo, and having to readjust their marketing and their shipping and all all that stuff. So it is a cost, but in the end, you hope that it's going to all be worth it. The partnership between Hims and Hers and then Novo is expected to lower the gross margins as the company shifts away from the high margin compounded medications to now low margin branded drugs. They are now, Hims' role shifts from being a producer, making the actual drug, to now a distributor of the third party product. The reason why this isn't so great is that they have a loss of pricing power. Hims can no longer set the prices of its compounded drugs. Now it has to be reliant on what Novo sets the drug price at. There's a higher cost of goods. Now as a distributor, you pay Novo for the drug. So these drugs cost more, and now you're just redistributing them, right? You have a lower take rate. Analysts expect the gross margins to decline because of this. And then discontinued advertising, like I said, as a part of the deal, now you have to take away all these advertisements from your old drugs, right? Your old compounded medication. So this is all a change that costs. The financial trade-off. Now, you can see the compounded model. This is what they used to do. And this is now their new model with FDA. As you can see, it seems a little bit more negative, kind of, right? The gross margin is higher when you're doing a compounded model, and now it's lower. The regulatory risk was higher, so now you have a low regulatory risk, which is good. But the supply chain, you had self-managed pharmacies. You could do it all yourself. Now you're dependent on Novo Nordisk. And then the user price is $49 a month, back when it was compounded with you, and now it's $150 when you have to go through Novo. The one thing I will say, in just a few years, GLP-1 is going, the patent is going to be up for public. Like, anyone can compound it. You can do whatever you want, and it will be legal. So in just about 3 to 4 years, Hims is going to be able to do whatever they want with GLP-1. Keep that in mind. This is temporary. So key risks to watch: operating margins, again, leaving little room for error. If marketing costs continue to rise a lot while the margins are falling, that's not going to be exactly good. We also need to see customer retention. You're moving patients from $50 a month now to $150 a month. That could definitely turn some customers off. And then the competitive pressure. Now Hims doesn't have a preferential pricing, right? They don't have like, oh, a better pricing model, this and that. Nope, they're the same as everyone else because they're going through the same, funnel and tunnel, whatever, as everyone. They're going through Novo, right? So it doesn't make Hims any more special, right? Stock market update. Actually, quickly before I go on the stock market update, what I think the stock price is going to do, I do believe it's going to be volatile. It's going to be very interesting because I do see Hims going back down to the low 20s. I can also see it hitting the mid 30s. I could see them announcing these things, investors not seeing the numbers, right? And they're going to say, hey, we don't like these numbers. Like I said, if you're going to see a 7 to 10% revenue growth compared to what you've been seeing, the 30s, the 40s, the 50s, 100%, it's not going to look good. Your EPS growth has gone down a lot. So investors, when you're looking at it from that point, they might not. If they're the earnings call, right? If they actually say some really positive things, then that could change things around. But if they have a little bit of like, okay, we're going through this process and it's going to be a little bit of a speed bump, if there's any kind of speed bump remarks, to me personally, I think that could send the stock down. I do. But I also think the stock could go up. This is a very volatile stock, and you have to be able to stomach it because anything can happen with Hims. So, to get into the stock market update, a lot of things have been going on. The stock market's at all-time highs. AMD and Intel have been going crazy, so let's kind of go over it. S&P 500 is up 17% in 39 days, all-time highs. The NASDAQ up 26% in 39 days, all-time highs. The Dow Jones has not hit all-time highs yet, but still 9% up in 42 days. And then the Russell 2000, also not at all-time highs, but basically they're up 18% in 39 days. So the market is running right now, okay? Electronic technology, clearly the winner out of all these segments, right? We also have technology services, which is good, but then finance got hit. Consumer non-durables, transportation, utilities, energy, minerals, health technology. I mean, basically the rest of the market got hit pretty hard actually, right? But when these big dogs are making these big moves, you just don't feel it. You don't feel it in the general market. The AAI Sentiment Investor Survey, the bulls didn't go anywhere. Bulls did not go anywhere. The neutrals went up, and so the bears, we lost. We lost some bears, and they went straight to the neutrals. They literally just they got their 6.7 and moved 6.5 over here. They only gained 0.2 in the bulls, so it's fine. We're slightly above historical average, which is good, right? We're at the average, so okay, we're basically there, right? 31, 33, we're basically at the average. So now we need another catalyst, right? We need some catalyst. Right now we're having some good earnings. Good earnings. So this could at least push the market to be up slightly, or to kind of not go down and like lay a flat, but kind of like a slightly, rise over the next few months until earnings or until another catalyst. We do have midterm elections this year, so got to keep watch out for that. Right now we're in greed. We're at 67. Previous close was 67. A week ago was 71. But a month ago we were in fear at 29, and a year ago at 57. One thing I want to show you. This is May 8th, right? This is the fear and greed index. What emotion is driving the market? Well, look at what happened. I just went 10 weeks ago. I went from this is my week 49 of my stock market challenge. I went to week 39. And what did the fear and greed index look like? February 27th, we were in fear. A week ago, fear. A month before that was, greed. And then a year before that was extreme fear. It happens like this. The market will turn on you so fast. It is so emotional. So emotional. Do not get caught up in the emotions. Last week's news. Like I said, the stock market's been running. So what happened? Well, AMD released their earnings. As you can tell, I give them an A. The only reason why I give them an A, not an A plus, is because the research and development and marketing in general did grow more than the revenue. That's fine though. They grew revenue at 38%. The cost of sales were only 31%. They grew their net income 89% and their EPS 89%. Really good earnings, really good. This is when they released their earnings. Boom, 27% up since earnings. AMD is on a run right now. Celsius released their earnings. I gave them an A. Cost of revenue went up a lot, and I understand that the business that they're in and what's had to happen, but that was a mark that I did not like to see. And then the SG&A, those expenses also went up, but it didn't go up more than the revenue. So the income from operations went up 167%, which is really good. Net income 148% up. 147, because that's to the common stockholders, and then the EPS was up 120%. That's really good, right? You're seeing, the stock's got to go up, right? Didn't do anything. It went up for a second, for a day, and then it went down. So Celsius released some really good earnings and hasn't done anything. So it really depends on what stock you're in. Palantir, right? This is a very popular stock that people know of, right? Palantir. Revenue, this was an A plus as much as you can get there. The revenue is 85%. The cost of revenue only went up 25%. That's ridiculous. Then the net income grew 300% and the EPS grew 325%, right? There's no doubt that this stock is well up. Nope. It is down. It is down about, 7% or so? That's crazy, right? That's crazy that Palantir, with an earnings like that, is down. There's reasons. It's still kind of overvalued, but at the same time, if they release earnings like this at all continuously for the next few quarters, that the stock will be cheap. But as you can see, it still hasn't gone anywhere. Last week, we also had the strong April jobs report. The U.S. economy added 115,000 jobs, significantly exceeding the expected 65,000. But the unemployment rate did still hold steady at 4.3%. So that's giving investors the idea that it's going to be giving the Fed a soft landing narrative for the Fed, right? Apple Intel chip partnership. Shares of Intel surged 13% after reports reached that a deal. Oh, yeah. Apple Intel chip partnership. Shares of Intel surged 13% after reports that it reached a deal to supply chips for Apple devices. Yeah, it went up. It's up 200% in 39 days. Intel is up 200% in 39 days. Intel is a very, very interesting chart. Let me show you why. It went at some point just a while ago. It was still at 0% in 25 years. From that dot-com bubble, look at where it used to be. Way up here, right here, right in the 70s to 80s, right? Between $70 and $80. It never went past that again. This is one concerning chart for me. If I saw this, that makes me feel like, oh God, are we here? Are we going to be here? Now look, there's still a little bit of room. There's still a little bit more growth after this first initial big boom. But this was the first, I just don't know. This is a very interesting chart. It's gone up 65%. Intel's up 65% since 2001. You have stocks up 65% year to date. So that's a pretty interesting if you invest in back here, you're finally this is what you're doing. You're like, we're finally green after 25 years. I should have just put all old people because these young people weren't even alive when Intel was at its previous all-time high. So yeah, that was pretty interesting chart. The U.S.-Iran conflict and ceasefire talks. There's renewed clashes near the Strait of Hormuz. However, sentiment recovered on Friday. Reports of a ceasefire, and then the U.S. and Iran are nearing a diplomatic framework. Are we? The U.S. fires on 2 Iran-flagged tankers as we expect a response on the peace. Trump calls the strikes on Iran a love tap after destroyers targeted in Strait of Hormuz. So it's like, we don't really have any update on this. Who knows exactly what's going to happen? And now we're getting also mixed signals from the Federal Reserve. They noted that while there is internal disagreement at the Fed's latest meeting, the committee is largely aligned on keeping rates steady. So it's kind of bringing the unified front on a wait-and-see approach. So investors are like, okay, this is what the Fed's going to be doing. We have a changing of the guard in AI hardware. While the Apple Intel deal dominated the tech news, a broader shift occurred as AMD and Micron saw massive rallies. Analysts began describing this as a changing of the guard in the AI sector as these firms began to outperform NVIDIA. That's pretty impressive, right? AMD is now absolutely outperforming NVIDIA. This is Micron, 46% just from May 1st to May 8th. Up 46% just from May 1st to May 8th. Up 138% from March 26th to May 8th. So Micron is on a really big run as well. Next week's news, what can you expect from the stock market next week? So we have an April Consumer Index report, the CPI. So on Tuesday, it will be released. A hotter report could reignite fears of stagflation and pressure the Fed to maintain its hawkish stance, right? So we don't want to see that. Federal Reserve leadership transition. This is the week of May 11th is expected to see Kevin Warsh finally assume the role of Fed chair. Nothing really that'll move the markets that much, but it's just something because he's going to be the next guy. And then the Trump I don't know why I can't say that, summit and Iran peace response. Markets are awaiting Tehran's formal response to a proposed memorandum of understanding to the regional war. Again, what are we doing? I don't know if that's actually going to happen. So, earnings. We just had our earnings. We just had the big earnings. The earnings that I'm looking at right now is Hims and Hers. Constellation Energy, right, has to do with, the war and what's going on. But really, Hims and Hers, Hims and Hers, Hims and Hers. That's what I'm looking at. That's my big one. And it's happening Monday after the close. So just be ready for that. All right, let's go into my stock market challenge, right? Week 49. I started this June 2nd with $7,354. And I am now at $9,484. I was up 2.5% on Friday. And this is where, through the weeks, right? This is week 49, 8, 7, 6, 5, all right. So my goal was to be at 11,400, and I'm at 9,400, obviously lower than my goal. I went up about 4.5% against the goal. I'm down 16%. Since June 2nd, I am up almost 29%. But I do deposit $50 every single week. If I were to take away all of those deposits that I have made, I'd only be up I'd actually be down. Sorry, I'd be down about 10%, right? Now, again, those $50 deposits may have put, some gains and some losses in some of the stocks. So, I just took out just straight every $50 deposit. If I had just taken that out cash, this is where I would be. This is exactly where I'd be. So this is why just consistent deposits is very important. You might be thinking, well, you're down so much, you lost money like that. But I have been buying stocks on the lower end. In 5 years, all of these $50 deposits are going to have grown substantially, right? So that's what I'm hoping for. My goal is 20% per year, compounded annual growth rate. So this is these are all my holdings, right? So as you can see, TQQQ, that is my top holding. It's gone up 12% in the last week. HIMS, as good as it has been, it went up 10% today, but it's still down 5% for the week. Celsius went down 5%. It's up 2% for the week, but really didn't do anything after the earnings. And then MU, I'm sad. I got so little. I got 0.12 shares. I put $50 into it, and I'm up 85% already, 25% for the week, 15% on Friday. I bought this thing at like $403. It's at $746. And I bought this okay, maybe, I liked the numbers. I liked it. I was like, okay, I can build it a little. Man, MU is just gone crazy. I did buy ServiceNow. I bought 1 share of ServiceNow. So I am now in ServiceNow, and I'm going to be adding to that position over time. So thank you for watching. I really appreciate anybody who is still watching at this moment. If you can, give me a like and subscribe. And thank you for watching. I appreciate it. The market's been going crazy. We don't have any more really big earnings coming up. NVIDIA is not this next week, but the week after. So, you look out for that. But really, we don't have any huge catalysts from here, right? We have a lot of just random news now that's going to have to happen, and now we're going to be on the back of really good earnings. So I think the market's going to continue to push up. But when you have Trump in office, you have a current war going on, and we have midterm elections, anything can happen. The stock can change on you like this. The market can change on you like this. It can go down another 10%. The odds of it going down another 10% are low. The market does not like to go down multiple times 10%. Doesn't like to go down 10% and then recover and then go down another 10% and recover. Typically that doesn't happen twice in a year. So that's something to keep in mind. Something to keep in mind that could have been the crash of the year. Right? So again, thank you for watching. I really appreciate anyone who's watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.